Dan, you've been pretty positive on the markets. Is what Tom, the case that he made, does that make sense to you?
I like to make a habit on the show of disagreeing with everything everybody says. Tom knows that very well. I agree with almost everything he said.
But what is this then in the market? What is it? Is it just a growth scare and this too shall pass?
My old friend Nate Rogoff used to say sometimes stocks go up and sometimes stocks go down. And we're in one of those periods where after a terrific rally, certainly after what happened with Japan, stocks are correcting somewhat, not unjustifiably so. We've had a good rally. But I will echo a point that Tom made on the political front. Tom talked about Trump's odds in the polls. On September 15th, the date of September 15th was the day that the odds of Trump winning the overall election hit its peak. The stock market the stock market subsequently peaked on July 16th, the next day. We have not made a new high since then. So I'm not making the whole stock markets at the whim of political polls, but I think given the tax implications of the TCJA, of unrealized gains, et cetera, there's probably something going on in markets right now that does have a political tilt to it.
We think there's going to be, Court, much more volatility, if nothing else, between now and Election Day, which is 60 days away.
There can be. I mean, we've had a pretty unvolatile year this year, like historically speaking, and especially as you lead up to an election, you can see some volatility because we're kind of at that stage in the election cycle where both candidates are going to have these grand ideas of what they want to do and these changes they want to make. But realistically, a lot of that's going to get watered down, whoever does get in office, which is why you get some volatility with nervousness as you lead up to the election. But regardless of who wins the election, it does tend to be a good thing for the stock markets over the long run. So I think if there's volatility, you want to take advantage of that as a buying opportunity. It's not something you want to get out of. And I'm hearing that a lot from clients. Like, should I get out till the election? No, you just want to use these opportunities if they arise.
What happens, Dan, if everything that the three of you say is correct? And this is just a growth scare. Things are going to be just fine. But the price is still wrong of the market. That earnings are not going to be as robust as the market would like to believe, even if we have a soft landing, and therefore the price is wrong. And that's what is being recalibrated as we speak.
Well, listen, I'm not going to break any news by saying if the price is wrong, stocks will go down. I think what we would argue and have been arguing and are arguing is that the price is right. I was asked the other day about is the market incorrectly pricing in a soft landing or something like that. But when you look at the data in front of you, we're, at least for now, we're getting it. It's happening. Unemployment's going up a little bit. Some of it is the immigration story. Some of it is people are losing their jobs. Wages are coming a bit off the boil. Companies are telling you consumers, particularly in the packaged goods space, have had enough of increased prices. So some of the consumer confidence. There's a lot of stuff going on right now, but largely speaking, it's commensurate with a slowdown off an extremely accelerated economy in the back half of last year. And just on that front, I would just note for the viewer at home who hears all the time, the economy's slowing, the economy's slowing. The economy slowed in the middle of 2006. Stocks went on to make a new high into the end of 2007. Obviously, something happened afterwards, but in the interim, stocks went higher. Stocks slowed down in the middle of 2012, in the end of 2012. 2013, for any of us that were there, was a phenomenal year for stocks on the back of that slowdown. Just because the economy slows down doesn't mean the stock market has to necessarily slow down. They don't automatically go together.
Nobody passed out, Tom, the handbook that says, hey, this is step 1, 2, 3, 4, and 5 of what the soft landing looks and feels like. So we're not exactly sure what to make of the little softer report here, maybe a little stronger report there, another softer one here. We're jumping to conclusions, figuring that maybe the soft landing story is in doubt.
That's right. I think there is soft landing fears, but I think the bigger fear would be a credit event. I just don't think there's a lot of leverage in corporates. We know household leverage and debt service ratios are still 40% below they were at the last cycle peak. So I think there's a lot of room for credit to expand, and capital spending has been muted. So to me, I think the soft landing still has a lot more arguments versus a hard landing, which is, we've overspent.
What about the buy the dip idea, Court? Tom says, I wouldn't sell tech. Likes a lot of these other parts of the market, as you clearly heard, even suggesting, these tech stocks are attractive with this sell-off.
Yeah, and I do agree with that because I think when you look at even in the earnings growth with the Mag 7, you're still seeing robust growth there, but I don't know if it's going to necessarily keep up with some of those underperformers. Like you brought up small caps, and I actually do agree with this, where when you look at Q3, Q4 earnings, those are actually likely going to be accelerating at a faster pace in some of these other areas of the market. So a lot of people, I mean, I would say probably 90% of the people who come to us within the last year are much more overexposed to tech than they even realize. Because say, oh, I have NVIDIA and I have Apple and Google, but I also have this growth fund and this tech fund. It's all owning the same thing. You own way too much of it. You just want to make sure with new money you're adding, just make sure you're better diversified. Because if the rally broadens, you want to take advantage of the broad rally, not just the Mag 7.
Let me also say about NVIDIA and those stocks. Like, what are you supposed to pay for a stock that's growing revenue at 400%, growing net income and EPS at 300, whatever the exact numbers are, at multiple 100%? What are you supposed to pay for that? And that, obviously, Google has some regulatory issues right now, and Apple is sort of an island unto itself from the growth standpoint. But for the rest of those names, Microsoft, et cetera, what are you supposed to pay for those stocks? They're supposed to trade at a premium. And to Tom's point, again, for the millionth time, we're not a particularly large tech investor, but when those stocks sell off, so when you're trading at 30 or 40 times forward in the case of some of these names, you're going to get 8, 10, 30% drops. It doesn't mean the fundamental story for them has changed. And more importantly, Tom makes we've all made this point a zillion times, but Tom brought it up again. The rest of the market, not screamingly unattractive, certainly in an environment where the economy still continues to grow, and most importantly, we haven't mentioned it once, amazingly 17 minutes into the show, the Fed's about to reduce interest rates for, to borrow a phrase from The Bachelorette, the right reasons, hopefully, as opposed to the wrong reasons.